Hi, I'm Deb Jones with Citizens Bank and a board member of the Capital W Collective. I'm welcoming all of our Capital W Collective fans to the final installment of our four-part series of the fundamentals of pricing. This final video is a short speed dating insight into how pricing intersects with roles within mortgage. Learn a quick perspective from one of our corporate sponsors, Citizens, and their colleagues across mortgage as they share their role and view of pricing components that you learned from the basics, the recipe, and MSR musings. Amy?
Thanks, Deb. At Capital W Collective, we are grateful for our partnership with Citizens and other sponsors. And particularly as a co-founder and board member of Capital W Collective, the support of our sponsors is paying it forward to educate, elevate, and empower women and their allies in and around the space of mortgage capital markets and secondary markets. We are working on more educational programming from the basics to master class level subjects. We're excited to soon launch our mentorship series in which leaders share their perspectives on mentoring and the benefits for both mentor and mentees. This will be a twice monthly video drop by Capital W Collective's Education Committee member, Dr. Stacy Wayman. Also, stay connected with Capital W Collective via LinkedIn and our website for various updates. We invite you to check out our Take 5 interviews with industry friends and other learning series shared by our partners, including white papers and other materials to give you access to meaningful education. We're glad you're here.
Hi, my name is Joe Blute. I'm the CFO of the Citizens Bank home mortgage business. When I hear the yield curve, the first thing that comes to mind is what is the cost of money? Essentially, understanding what it costs to borrow money for a specific time period, whether that's 30 days or whether it's 30 years. The yield curve is very important to us in finance as we think about how long-term and short-term interest rates affect both our income statement and balance sheet.
Hi, my name is Nathan Bell. I'm the head trader on the desk at Citizens Bank Home Mortgage. When I hear yield curve, the first thing that comes to mind is duration, which is a measure of a bond's expected percentage price change for a 1% change in interest rates. Looking at this slide, I see how the yield change connects to my role by driving changes in MBS pricing and subsequently driving our hedging decisions.
My name is James Rupar. I work in capital markets with Citizens Home Mortgage. And when I hear liquid asset, the first thing I think of is the agency MBS market, mortgage-backed securities market. It's the backbone behind everything that happens in terms of rates and mortgage pricing. And it's one of the deepest, most liquid, most tradable, most investable markets literally on planet Earth, other than the U.S. Treasury market. And that deep component of liquidity that the agency MBS market has allows the mortgage industry to price and hedge and offer a product to the consumer that's a lot cheaper than it otherwise would be if that market didn't back the asset like it currently does, right? So that's the first thing that comes to mind, I think, when I think of liquid asset.
Hi, I'm Jonathan Legendre. I'm an MSR analyst at Citizens Home Mortgage. When I hear liquid asset and I think about mortgage servicing rights or MSRs, I think about how there are so many players in this industry that are trying to find the most efficient way of valuing this. And in doing so, it allows the MBS that James talked about to be liquid. It gives options for banks to be able to sell the servicing, keep the servicing, give it to Fannie Mae or Freddie Mac, or keep it on their books themselves. And it allows for the customer to get their best price.
Hi, my name is Maria Esposito, and I'm a mortgage loan officer and market manager with Citizens Bank. When I hear pricing and points, I think about how I can tailor the loan to fit the borrower's needs. It's all about finding that sweet spot between interest rate, upfront cost, and monthly payments. How this connects to me as a loan officer is that it's my job to guide clients through the various loan options that may be available to them. And oftentimes there is more than one option so that they can make confident decisions that align with their financial short-term and long-term goals.
Hi, my name is Christy Fulton, and I work on the lock desk at Citizens Bank. When I hear pricing, I think of our current pipeline that is locked on one of our daily rate sheets. The borrower connects to my role because if anything changes on a loan, we help the loan officer to understand how this change will affect the original pricing. Understanding pricing is important because the borrower needs to be informed so they remain satisfied, and this helps the loan to move smoothly through the pipeline.
Hi, my name is Blake Duncan, and I'm the pricing and margin manager here at Citizens Bank. When I hear pricing and margin management, the first thing that comes to my mind is balance. Balancing competitive price position, volume and profitability targets, and operational capacity. As you can imagine, these are naturally competing forces that require constant balance. I see a connection between all three, and together the different viewpoints of each. The borrower has a perspective of what is this loan going to cost me up front and on a monthly basis in my budget? From an investor's perspective, am I investing this money wisely to earn my expected return? And then from a finance perspective, are we making enough on these loans to cover our monthly and yearly targets and expense ratios?
Hi, everyone. My name is Tom Drew, and I'm the Regional Sales Manager for Metro New York. I've been at Citizens for just over 10 years now. And when I hear the question, you know, how do the primary and secondary markets work together, and what comes to mind? I would say the primary market, which is what sales is part of, we interact with the customers to try to help them along the journey of either purchasing or refinancing a home. And the secondary market is that's the team behind us that helps us with, you know, going to market with all the great products we have and competitive pricing. And it really allows us to bring as many customers into Citizens Bank as possible. You know, understanding this role between primary and secondary market it's important because, you know, most people, when they look at a mortgage company, they think of, like, you know, the sales team, right? The people out there in the market are interacting with, you know, realtors and attorneys and, you know, financial advisors, all of it. There is just a huge undertaking behind the scenes by the secondary market team that's working to try to stay, you know, really up to date, current, and take as much feedback as possible from the sales team to try to stay, you know, at the top of the market. So we have such a great relationship here at Citizens between the primary and secondary market, and you know, we look forward to many years, successful years to come.
Hi, my name is Alicia Thurston, and I head up our investor relations here at Citizens. I've been here a little over years. When I hear primary and secondary market, the first thing that comes to mind to me is in my role here is we focus on secondary side. So I kind of look at it in a reverse way. Is the secondary side kind of is what dictates what we can offer on the primary side. So that's what the customer experience is. So what I mean by that is when we think of programs and products and features, a lot of that is instructed by what is happening in the secondary market. And then we take that and we push it upstream. So that will impact the customer's pricing, that would impact the customer's product offering. And so there is a distinct difference, but they interchange quite a bit because you have to have one to the other to make the whole life cycle, mortgage life cycle work. I lead our investor relations, so I manage the relationships with our investors. And the way that I kind of look at this in general is, you know, your primary side is where that customer experience is working with their loan officer to operations to where that loan is closing. And then really at the time of closing is where that piece of this secondary where we are evaluating that loan and determining based off like terms who we should sell that loan to. And what I think about is how this all works together is from a customer experience when that loan closes, their loan boards to a servicing platform. A customer doesn't know who we've sold their loan to. All they know is, hey, I closed my loan with Citizens. I make my first payment to Citizens. And from a customer experience, you typically don't know what's happening on the back end of who bought or sold your loan. What will happen is sometimes, especially like in our private sales that we do, a customer will experience where their payment is now needs to be made to a new servicer. What typically means with that is your loan has been sold to another investor and you're transferring, your loan is being transferred from Citizens to such as SPS servicer as an example. So it's really interesting to think of all the tentacles, as like I said in the beginning, is the back end, the secondary side really kind of creates the front end. And then we use, just like Tom was saying, the partnership is so important because we can't offer products if sales can't bring those customers to the table. And they can't bring customers to the table without the products to be able to build that relationship with the investors and offer. So it's really is a full life cycle for mortgage.
Hi, my name is Mary Ann Callahan, and I lead Citizens Mortgage Operations team for both retail and correspondent. When I think of pricing and margin, I realize how important it is to partner with my capital markets and secondary teams so that we can align our pricing and our current volume situation. Managing my team's capacity is my biggest and number one job. And too much volume impacts not only our cost, but most importantly, it impacts my customers. And it's critical that my partners know how much volume I can handle in any given month. We pride ourselves on providing a great customer experience, and delays in decisions, underwriting, and closings has a huge impact on how our clients feel about us and if they'll return to us in the future.
My name is Hope Henniker, and I'm a reporting analyst at Citizens. When I hear the term margin, I think about how I track and report the financial spread between the costs we incur to originate a loan and the price at which the loan is sold in the secondary market. Understanding margin is important because it directly affects how gain and losses are reported from secondary market loan sales. This margin reflects the profitability of the transaction and is influenced by market conditions, investor demand, and the loan's overall risk profile.
Hi, my name is Amber Singh, and I'm a trader at Citizens Bank. When I think of margin, the first thing that comes to mind is protecting the initial margin that we expect to receive on a loan. As a trader, we put on hedge trades until we are able to sell a loan in order to ensure that our margin is not eroded by market movement, unexpected fallout, or large extensions in the pipeline due to capacity issues. Thank you for listening, and I look forward to hearing your thoughts.